Hey guys, welcome back to another Patti Martin Real Estate Group podcast. We're joined with a special guest today, Amyn Nathoo. You're a TD mortgage specialist, and we're going to talk about how parents can help their kids buy real estate. Amyn, why don't you tell us a little bit about yourself?
Oh, thanks, Adam. Yeah, so I've been with mortgage specialists with TD Bank for 20 years. We do all types of lending across Canada, regular purchases, refinances, you name it, Canada-wide. So happy to be here and kind of give some insight of the market and how parents can assist their children in this market.
Awesome. Patti, before we jump over to you to ask the first question, Amyn, is this a question that comes across your desk often?
Honestly, it comes up all the time. I don't want to date myself, but going back in the business, 20 years, you used to see gifted down payments a little bit, and now you're seeing it all the time. Let's be honest, the market in the Lower Mainland it's expensive. I mean, it's always been expensive, but before it wasn't as bad, so people were essentially able to get in kind of without help from their parents. I bought my first place 2002. I was 22, 23 years old. And I was renting a basement suite, and my parents said, "You should buy a place." I'm like, "I don't have any money." They're like, "No, we found a condo. It's $130,000. They're like, "Do you have any money?" And I'm like, "I think I got $5,000 in an RSP." And they're like, "Okay, you put 10% down, 13 grand, give the $5,000 RSP, and we'll give you $8,000, and we'll do a 10% down deal." So I said, okay. So they gifted me $8,000. I put in my RSP of $5,000. It's all I had. I bought the place, and it was an amazing investment. So yes, gifted down payment has always been around, but more so now you do see it quite a bit. And parents want to help. Sometimes they're sitting on cash where they want to contribute, and if they don't have cash, we look at ways on being, hey, how can we help you guys essentially tap into your property to access equity to essentially help the children with gifted down payment.
Well, welcome, and it's so nice to see you. We talk on the phone all the time because I really trust Amyn. He's got great information, and he's a very current and up-to-date mortgage specialist. So we appreciate you coming today.
Thank you.
And this was born out of this idea to talk about this topic was born out of our own database, who all are thinking about how can I help my kids. And I agree with you that for people to be able to buy these days, they need help, especially if they're staying in the Lower Mainland. So, beyond having a big bag full of cash, what's the first way that you tell people to leverage their home equity in order to help their kids with a down payment?
So there's a common term out there in the lending banking world called HELOCs, home equity line of credits. It's a great product for people to essentially access equity in their property, and they can use this equity to essentially fund the gifted down payment towards their children. Now, let's say somebody has an existing mortgage on their property. The bank can offer a home equity line of credit behind that mortgage, and that line of credit can then be used to access the down payment that I guess the parent would like to gift to their children to be used for that purchase. And if someone doesn't have a mortgage, the line of credit can just be registered right off the bat on the property. So regardless if someone has a mortgage or doesn't have a mortgage, the home equity line of credit can be used to essentially gift funds. Now, what we see a lot of is down payment requirement of 20%, which essentially helps people save on insurance. So oftentimes you have children who have a down payment, they have an RSP, they have a first home savings account, but they just don't have quite enough to get to that 20% number. And then the parents' equity can be used as just kind of the delta to top up the difference between what they have and what they need to get them to the 20% down number.
Just like you
now
were
using that the HELOC to help facilitate the purchase, do you find that parents are also putting themselves on title? And then what are kind of the pros and cons of the parent putting themselves on title or not putting themselves on title in regards to that kind of HELOC?
Great question. Now, the beauty of us and our products is we allow parents to be on title or off title.
Oh, that's wonderful.
It's huge. The industry norm in a non-spousal relationship is to have all applicants on title. So I'll say that again. The industry norm, if it's a husband and spouse, you can allow guarantors off title. But the main kind of industry norm is all applicants need to go on the deal. For our channel, we don't require that. So we ask the question, hey, do you want to go on title or do you want to co-sign off title? So we give them that option, because depending on the situation, we do see parents saying, you know what, I'm okay to gift funds. I'm okay to co-sign the mortgage to essentially help with the qualification, but I don't want to be on title. So we will give you that option, and then the parents can decide if they want to go that route or off title. Adam, on that point about the HELOC, about the equity, they would essentially be tapping into their own property to access the line of credit. So let's just say mom and dad have a house in the Lower Mainland and they want to get a line of credit on that property for the down payment. That's their property. We're now adding a home equity line of credit on their property, and they are now gifting funds towards their children for the purchase. So typically when parents are helping their kids, there's kind of two ways typically we see. Option one is they give them the down payment they need to qualify. So let's say the kids can qualify for a $500,000 mortgage and the purchase price is $700,000. The parents are essentially gifting them $200K, and the kids are essentially qualifying for $500,000. That's option one. In that example, the parents aren't co-signing. They're just gifting the funds towards the purchase. And oftentimes you see people would think, I don't qualify for $500,000, but I would like to qualify for $500,000. And this is a situation where we would add the parents as a co-applicant on title or off title.
Or off. That's amazing.
It's amazing, depending on their requirements. Yep.
Wow, that's great.
Yeah.
We are going to talk with a lawyer in a subsequent podcast to give our clients more information. But what would some of the risks be co-signing a mortgage for someone? So if they on or off title?
Sure. So in both examples, besides the obvious of going on a deal, whether you're on title or off title, you are responsible for the debt regardless. So if you're guaranteeing a loan going on title, off title for $500,000, that liability will be on the parents' books. So if the parents are seeking financing in the future, maybe they're selling their house and buying another house, maybe they want to buy a vacation property or a rec property, that liability that is on their profile could hinder the amount they could qualify for in the future. So we often do ask, hey, if you are co-signing, that's great. And, it's awesome that you're able to help with this transaction. However, if you're planning on, acquiring financing down the road, it could limit the amount you could qualify in the future, because the bank will assume the full debt on all applicants, whether you're on title or off title. Because if you're on the deal, you're on the deal. If you have 5 friends buying an investment property and the mortgage is $500,000, we don't say it's 100, 100, 100. It's all. If you're on the deal, you're responsible for the debt. So that's one thing that they should be aware of, is that everyone has a different situation. The hope is that usually someone who's established helping their kids, maybe they don't need financing down the road. Maybe they do. Everyone has a different situation, but that is definitely something they should be aware of when co-signing for their children. Very important.
Cool.
So it sounds like one way or the other, you're going to be on the books in terms of what the bank sees for your financial profile. And if you're off title, then you might not be responsible for something like the speculation tax or the empty home tax. Like, you don't have to make the declaration, but you're responsible financially.
And that's the reason why everyone has a different personal situation. Like, in my career, I have seen stories where parents are like, you know what, I'll co-sign off title. And then for whatever reason, people get into maybe not the greatest relationship after the fact. And then the person who wasn't involved initially on the relationship side is now on the deal, and now they're claiming an interest in the property. Now, if you're, this is best to talk to a lawyer about, but if you're
we are going to talk about that.
Perfect. And if you're
that's on our list.
Perfect. And sometimes you can see parents going on title, you're almost protecting the family interest in the property, right? Because now there's multiple people on title. So that's something because I have seen that. I've seen that before many times where they go off title. So it all comes down to, the situation. Another common example is, and again, they can do it. We hope they don't, but they can. If you have someone off title, so you have child on title, parent off title, because they're not on title, the applicant could essentially refinance the property without their consent. They could add on a private mortgage without their consent because the parent's not on title. So these are other things that, people need to be aware of by not going on the deal. And that's why it's important that every situation is different. This is why we see some people going on title, some people going off title, some people not even co-signing at all, just gifting the down payment needed for them to qualify on their own. So again, we see all types of different transactions here.
Before we jump over to the next question, just a follow up. If you were helping your child kind of get into real estate, would you go on title or be off title?
Honestly, I'm a little bit of a cynic, and I got two little kids right now who are 7 and 8, and when they're at that age, I obviously love real estate, and I think it's a smart investment. I'd probably go on title just to protect the family interest. You just don't know what's going to happen down the road, and maybe when they're older, they can essentially take off the debt. And you brought up a good point, Adam, about being responsible for debt. Let's just say someone's co-signed the deal. If someone has a different position in a couple of years, their profile's stronger, we can take the co-signer off. So let's just say, we have an applicant where they need a co-signing for the purpose of the approval, but, maybe a year goes by, 2 years go by, they get a promotion, they have a better pay. You can come back to the bank. We will essentially re-qualify the deal, take the co-signer off. Again, another situation which you can do. So just because you're on the deal now, it doesn't mean you're going to be on the deal forever. Right.
Does gifting the money or does it affect the person that you're helping?
No.
Does it affect their
it doesn't.
approval?
So it doesn't. So basically with the qualification, the banks are pretty good in that sense. They don't care if the down payment is gifted or not. They don't care. Gifted or not gifted down payment, it's totally fine. Up until a couple of years ago, it did matter if the property was a revenue property. So if someone is buying an investment property, gifted down payment was not allowed. It's no longer the case. It's changed. So banks' policies now have allowed gifted down payment on principal residences or investment properties. So, in terms of the qualification, no, it's just a positive. It's a bonus.
Good. That's great.
Are there any unexpected ways that gifted money, anything like that could affect mortgage debt ratios or anything like that on the child's behalf?
Adam's the negative one.
No,
I just want to know. I want to be prepared for everything.
He's the doctor. Got to get to it. This could happen. You could die in this operation.
I will say this: the only thing I've seen when it comes to gifted down payment, which almost always it's a non-issue, but I have seen an odd issue where you have parents gifting money to their children and call it $100,000. And the parent's like, I will help you with this money, but I want it back in the future. No, in that situation, the parents are signing a document that says this is in fact a gift. It's not going to be repaid. If there is pushback, it is an issue in the sense that if the bank feels it's a loan and not a gift, then they don't know what the repayment terms are. And that repayment would affect the qualification. No different than a car loan, no different than a Visa card, right? So it's very clear that when they sign this letter, they say, yes, you are aware it is a gift. Now, after the deal closes, if they have a change of heart and they say, yeah, you can pay it back, that's different. But for the purpose of the funding of the mortgage,
like the qualification purposes,
there has to be a gift.
What if someone does that and then later files a second mortgage, no interest second mortgage?
You can do that. We see that
it
all
does
the time.
happen, doesn't it?
Happens all the time. And again, back to the point where the parents are protecting the family interest, right? So the first mortgage registered with the bank, gifted down payment, the deal's closed. Now they're like, you know what? I want to secure a second on the property, like a second charge, because I just want to have some more security. Totally fine. You can do that after the fact because the bank's in first position. That second
Yeah.
charge is coming after the fact. So yes, you can do that.
I do think we're seeing this more because people, have so much equity in their home.
Yeah.
And they wonder why they want to wait to help their children until they're no longer here. It's much more beneficial to be generous now so
100%.
that everyone lives a good life. And so it's wonderful to know there are options. I think that, and they're pretty simple. It doesn't have to be too complicated. A bank or someone could phone you and have the answers within minutes, really, right? And that they would know how much they qualify for. They would know what they could afford to comfortably give their kids without payment-wise, all of that sort of stuff. So
10-minute call, that's all I need. 10 minutes, ask the right questions, and we can determine it.
And I will tell everyone that is absolutely true. And that is one of the reasons, if you know me, you know that I like answers quickly. And that is one of the reasons I find Amyn so fascinating, because he never wastes any time. He gets right down to business, bang, bang, done, out. I love it.
I don't like wasting time. One thing I wanted to mention just on the first topic about the line of credit, you don't see it often, but I do see it once in a while. Oftentimes when people apply for a home equity line of credit on their property to use as gifted down payment towards their kids, because in BC you can defer your property taxes. So oftentimes you see people who are, I think post 55 saying, I'm going to defer my taxes, which is fine. Property taxes are very expensive, and if there's no need to pay it, they can defer it based on their equity. If you're getting a home equity line of credit, those need to get paid out, and then you can defer again. Okay, so oftentimes you see people that have, because that deferred property tax is registered on title. It's registered on title. So that charge needs to get removed with the home equity line of credit, and then they can defer the property taxes again.
Subsequently.
Subsequently, correct.
Yeah, after they have the
deal's funded,
HELOC
correct.
in place. Okay.
Yeah, but we won't fund a HELOC with a deferment on title. Yeah, and you don't see it often. But a lot of the properties on the west side with $30,000, $40,000, $50,000 property tax bills, some people just say, I'm just going to defer it. I'm not going to pay it. So you do see it, kind of rare, but it is worth mentioning.
Thank you.
Okay. Yeah. Quick question as we get wrapped up here. When a parent takes out a HELOC to gift a down payment, there's going to be a HELOC payment. There's still going to be a mortgage payment.
Yes.
What are some solutions into paying either of these? Can we wrap them into one payment? Is it going to be a mortgage payment, then a HELOC payment? Like, how does that kind of get wrapped up neatly?
Yeah, we can do it either which way. The HELOC product by nature is an interest-only product. So the benefit of keeping it interest-only is your payments are lower because you're not paying any principal, but the rate could be a little bit higher. Line of credits range anywhere from prime to prime plus half. Right now, prime is 4.95%. But again, with our HELOC product, if somebody wants to convert that to a traditional mortgage, you can. So if somebody takes a home equity line of credit for $100,000 or $200,000 to use as gifted down payment for their kids, by default, it's interest only. However, if they're like, I want to lock this into a traditional mortgage, we can do that as well. Or we can do half and half. So our products allow that kind of flexibility to convert it to a traditional mortgage. No different than the first mortgage they have. If they want to mix everything together into one product, we can do that. So we have all kinds of products and flexibility needed to meet their needs.
That's awesome. Great. That's really good to know.
Yeah.
Amyn, that is a ton of information and valuable information for all of our guests. I'm going to make sure that we have your information. If it's any of our clients are interested in contacting you, they can get a hold of us. We'll happily refer them to you.
Anytime.
And Patti, are there any last comments that we want to share before we wrap up?
No, thank you, Amyn. It's a big decision, but it can be solved if you decide to move forward quite quickly. And I'm a big supporter of helping the next generation by, because 100%. I think it's important. And just like when your parents all those years ago helped you, it set you on the road. I go back to where I started, and it was the same thing. It was very, because I'm way older than you, and I was gifted a certain amount that was very minimal, but it got me on the road and the path to ownership, and I'm forever grateful for it. So to all of our clients, it's worth taking a look at. It's worth discussing, and we are happy to talk about it at any time.
Great. Well, thanks for the
Wonderful.
time and opportunity. And if anyone has any questions, don't hesitate to reach out.